for up to 8 hours.
How about just 20 minutes?
All right, welcome everybody. I'm Scott Patton, and joining me is Alan Maxwell from the wavesofprofit.com, and we want to talk a little bit about what happened with Apple yesterday and today. It was an awesome opportunity for us day traders and people that want to get into options. So I'm going to get Alan to show you exactly what happened yesterday and today, and how we could have made money if we'd have decided to take advantage of it.
Thank you, Scott. Well, I'm just going to take this chart away for a moment. This is what Apple's been doing over the last bunch of days. So this is for August. You know, each one of these little splotches here it's called a candle. And so these are for each represent a whole day. And you can see back here there was a huge drop. I guess you can say a lot of things about that, but this one here is the one that's interesting. It's very tall. It goes all the way up and all the way down. And what I'm going to do is I'm going to show you a zoomed in version of that day. This is the basic Wall Street tool. So here you can see that where that went way up and way down, that's here on this bottom part where the day looked like a mediocre, boring day, and then all of a sudden, you know, down and then up and then down. And great.
That occurred when Apple did its big announcement on the iPhone 6 Plus, the iPay, and the iWallet, or the iWatch, I mean. So this was a whole pile of stuff going on from 1 o'clock to 2 o'clock, and there was a bunch of negativity right at the beginning, I guess, and it dropped, and then everybody got excited, and the stock shot up, and then they got over all their excitement, and it shot back down.
Yeah, and that's been a known event for a long time. For new people to the stock market, they don't know what that's all about. But there's a lot of emotional energy in stocks when investors think, oh no, this is terrible, or somebody, you know, just spits out a little rumor of what they think. A stock can move around a fair bit in a short period of time of just a day or 20 minutes. And they also had, during their presentation, Apple did a presentation to a bunch of people, like millions of people. Well, there was a failure in their presentation mode. So there was a lot of people that thought, oh, well, there must be something wrong with Apple. So what they do? They went out there and said, let's just go sell the stock, you know, because there's a problem, because somebody tweeted about that. Anyways, of course, you know, sanity set back in after people realized. So that's that day. Here's the next day. You can see it's a nice big green one, but this is what the day looked like, is big, long green move and a little bit of trailing out at the end of the day.
Cool. So let's talk about how we could have used options to take advantage of some of these moves.
Sure. Well, I guess the basic fun part is that you can make money quite easily, when a stock goes down or up using options. And the power of options is that it really multiplies the amount of money you make. So instead of making here like a couple of dollars on $100, which is a 2% gain, you could have easily made a 50% gain on your money. And you go, what? Well, let's go have a look. I'm going to hide this stuff right now and bring you to the day trader. And we're going to go look at what would have happened in the day trader if you would have been following that. So I'm going to hide that guy too. So I've loaded here the day, and I'm just going to bring up the chart. And this is the beginning of the day. But we're just going to zoom to the end of the day because that just makes things simpler. So here's Apple. And on the bottom here, you're seeing what's happened in the last bunch of days. I'm going to hide the time and a few things like that just to keep it simple. And so this is that, remember that thing we saw earlier where it ran up and then it kind of, you know, did this business? So this is the exact same day. And what we're looking at here and I'm just going to hide a couple more things off the screen. There we go. Is it's like, well, how did I know when to get in? Now we're looking at the end of the day, so it's easy for us to figure out, looking back what we do, but it works the same way in the moment. And so if you've got your rules figured out, it's pretty simple. So I'm going to turn on the signal system, so you're going to see this tinting happening here. So there's this tint in the background that says, you know what, this thing looks like it's trending. You might want to go get it.
So the red is trending down, the green is trending up.
Yes, exactly. And so when the background color goes to white, it's like, well, you know what, the move's over. When it goes to this half green, half colored, that means it's like the move's getting a little bit weak. It's not dead, but it's getting weak, and you might want to think about getting out. You don't have to, of course. You can do what you want. But it's just giving you some clues about what's going on. And so we've got some rules wrapped around all these clues so that you can be more successful. One of them is the risk zone. And I really love this because it's telling me, and this is our standard rules, is that if you have a fresh signal, that's where the color just began here, and it's outside of the risk zone, and usually closer to just outside is better, then that's probably a good move. And some of the other rules we've got are, does it have excessive volume? And that's what these, fuchsia histograms are at the bottom, is, and you can change that color. I just do that so you can see it easily. It's like, yeah, this thing's got volume. So, well...
And the fuchsia is not the volume, it's excess volume. So in other words, we expect there's a certain amount of volume that's going on, but when there's a spike in volume or it gets excessive, we know that that's either the beginning or the end of a move.
Exactly, and this is why we love computers for this kind of work, is because it figures it out for that stock and for that moment in time, which not all moments in the market are the same. And it does all that math, and we just go, hey, look, there's a bar there. Must be good. And so the other clue that we usually look at is, well, does it have a good slope on, like, is it moving up at a nice pace, or is it just kind of, see, like over here, I'm going to hide the risk zone stuff. You can see there's this dashed line, which says that, this thing's not really moving. It's okay, but not great. But here it started being great. Then you had a volume spike. You got the color. You're in the safer places to trade. You're in the right direction. So everything's looking pretty good here. And that's a great trading opportunity. This is perhaps not for beginners. It takes getting used to a little bit. But there was clues that this would be a great move. And there was comments in the news about the Apple, and of course when Apple or other companies do an announcement, a product release, and they do a media thing and all that, or for investors, of course, when there's a earnings season, which means that the companies are going to tell you what their dividends are, like how much profit they made this year or this quarter, there can be big changes in the stocks, and so there's a bunch of people, day traders and investors, watching for these events. So the clues are all there. It's like, well, let me see. We've got Apple and a bunch of other stocks on this day that you might want to look at for a big move. And it happened. And it happened where we wanted. And if we look at the time, it happened when we wanted. We just don't want to have a move happening during lunchtime. I'll hide the bars down there. This is lunch here. You don't want to start a move during lunch. But, outside of that time, you can have a great move.
Well, and you can see that right at the beginning, the first 15 or 20 minutes of lunch, it just went sideways on us.
Mm-hmm.
And then it kind of continued on up.
Yeah. And so this was a great stock. And we've got some other markers on here. One of them is this blue star that's basically telling us that this stock might have a great move today. Like, it might keep going quite nicely. And to keep an eye for it.
Okay. So why don't we move back to around 11 o'clock and then move forward? Because one of the advantages that we've got with the replay is we can play around with it. We can kind of see how it unfolds, and also we're able to actually pretend that we bought a call or a put and see what sort of profit we could have made from it.
Sounds great. So here it is. The signal is complete for that candle. I just right there, it's done. So what we'll do is we'll bring on the buy a call calculation system for us people that just like to click on things and not have to think too much. So I'm hitting the buy now button. It puts a little marker on the chart to say, yeah, that's where you bought it. And this is for an option. So the price profit ratio is based on options, not on stocks. But of course, option pricing follows the stock pricing. It's just makes it faster money, that's all. So I'm going to move forward here a few minutes. And you can see after 5 minutes, we didn't really make much money, 2%. But it hasn't really moved up much from where it started. But we haven't been told to get out. Everything's looking fine. I'll put the volume markers on because that's something we would watch. So at this point, we're now at a 13% profit.
Okay, and if you look up on the top there, you'll see that it's a 21 on the green for the general market. So one of the things we keep an eye on is how is the general market doing, and it's actually going green with us, which is basically it's like the tide is going in, the wave is going in. It's just another clue that things might be going up.
Mm-hmm. So we'll just move forward a little bit more here, and I'm just using the arrow key on the keyboard. There's lots of ways to do that, but it makes it easy. So now we're in the move for I guess about 25 minutes, and the value of the options would have gone up about 24%.
Okay.
And it's not telling us to get out yet. In fact, this little blue star came on, which is one of those you might really want to watch this thing because this could take off and do really well. So you're still in profit territory. It had a little bit of a rebound, but it's not like time to leave. If you're cautious, there's that little marker there that says, hey, you could leave now and you're still making good money.
Yeah.
But if you want to hang in and make a bit more money, it's going your way.
Because it has not gone below that blue line.
That's right. So we don't have the white no signal going on. We've got a caution of a half green, but that's not an exit. That's just you might want to keep your fingers ready to get out. So we're still moving forward. It's still moving up. It's moving up very nicely.
We're over 50% profit now. So if we'd spent $1,000 on options, we'd be making $500 right now.
Yep. And people find that hard to believe, but it's like this goes on every day. It's been going on this way for 30 years. So.
Okay, and if we had bought a stock for $99.5, we would have made $1.
Yeah, and typically you buy shares in lot sizes of 100.
So we would have made $100.
Made $100, but you would have put up 10,000 just to buy one standard lot of shares. And your commissions are actually higher with stocks than they are with options, depending on where you go. So here we go. We're just going to keep going until we get one of our two exit signals. I'm just moving forward here. Now, right there, that candle is complete. It's
we're in the white.
We're in the white. This other candle just started. So we're just going to hit the sell now, but it already told us 58%. But we're going to go see how long that took us. So we were in exactly 2 hours. So we got on 11:21. We got out at 13:21, which is 121, and made 58.5%.
Wow.
Now,
not bad for 2 hours work.
Yes, exactly, because there's nothing stopping people from having $2,000 or $20,000 on the line. So if you had $20,000 sitting here, you made 10 grand in 2 hours, which is more than any lawyer I know even though lawyers are expensive, you're beating out doctors and everything. The best surgeon I know, they pay him $3,000 an hour, and you could have made $10,000 sitting here.
And now I guess the caveat is this doesn't necessarily happen every day.
Not every day, but there was great clues that it was going to happen here on this one, and those kinds of clues are available. They're not that hard to find. It's part of being, I guess, intermediate to advanced day trader. There's places to look, and they'll tell you what's going on.
Absolutely.
And,
so, go ahead.
Yeah, we've got technical clues right here on the chart that tell us that this could be one of the good ones, because it's 1 out of 10 that are really good moves. And so the clue here, as I mentioned, was this blue star. We had exceptional volume. So if we didn't know what was going on with the stock on this day, we could look at these other clues.
Yeah, and we would still know.
You'd still know. So some of these other stocks, they probably didn't do as well, you'd think. However, let's look at this guy. I'm going to just get rid of some of the coloring and tinting and all that stuff so you can see the move a little bit better. But I was watching this one today. It was like, yeah, this is great. So it's like, well, what is this stock and what are they doing? I'm going to bring up the daily chart here. And this is weekly over here, but you can see that this thing's been falling down hard. This is today, this last channel. So you can tell that this thing is heading down. It's easy to tell, even if you don't have any of the color and stuff on. And it's like, well, we don't know exactly what's going on. We could find out and, whatever. But I don't care to listen to the news and try to interpret what, this opinionator says. Because, one guy, analyst, will say, well, it's going up and this is just a blah, blah, blah. Another one will say, well, no, this is the end of the company. And so, you don't know who to listen to.
Well, plus all we want to do is follow the trend for a small period of time and make our money.
Exactly. And it's like, I don't need to know how the stock will be in a month from now. I want to know how it's going to be in 10 minutes. Well, they can't really tell me that. But that's where, if I throw the tint on, it's like, now this down here is the bottom for the last bunch of days, and this is what happened in the day today. Well, the tint here is telling me, well, I got a red signal there, and I didn't have to get out until about here.
Right.
Now, I have my own rules about that, and I'm going to show you that in just a second. But we're going to
see a couple of those greens going the other way. Probably get out a little bit earlier.
Yeah, and well, my rule is if I make 10% on an ordinary stock, I'm happy, and I usually get paid on those. But when it's a real runner like this one, I'll leave at 50%. So let's go look at 10 o'clock, for example. I'm just going to set the time here to 10. And yeah, around there is good. Let's just go back a little bit. So we'll just say right here, and we'll bring up the buy-sell button. I'm just going to say I'm going to buy a put, which is how we make money on a thing going down.
Alan, do you have the K-band coloring around your candles there?
I don't. We're trying to keep it really easy, but yeah, I'll put that on you for you, Murray. Thanks for joining us. And
because those are solid signals, and sometimes 3 or 4 signals there, and it tells us to get in.
Yeah, on the longer term, which is down here, it's definitely got the signal color on the K-band, but it doesn't yet on the upper part. And I've got the K-band lines drawn in here just because that's what I do. So here's the K-band. It's kicked in as well. So and it's right after 10 o'clock. So that'd be the time that I'd get in anyways. I wouldn't get in early, and we talk about all that about why it's safer and so forth. But right here, I would be getting in. So if we just ignore the first 20% profit we've made on this stock, I'm just going to move forward a bunch and just show you how much money this thing made. It was up as much as 233% profit.
So you doubled your money.
Yeah, you tripled your money actually, but you walked away with 200% profit and your original capital. So if you put in $1,000, you walked away with $3,000. And you go, well, these things don't happen every day. Well, they happen enough that it's not that hard to find that. And this one was thrown on the list for us.
Actually, let me jump in. It's very difficult to find. We happen to have put together an amazing program that does a lot of the calculations and shows a small group of stocks that are highly likely to have good results out of the 5,500 stocks that you could be looking at.
Yeah. And in the live program, because this is the practice environment, which is exactly like the live, except for a couple things that are normal steps moving forward. In the live program, we give you some other things that are very handy to have. One of them is the Treasure Monitor, which essentially keeps its eye on about 200 stocks. And if you really think you don't have enough things to trade, you can go through that and before the market opens or while it's running, and you can go, whoa, what's going on with this guy? And if you want to go ride that thing, you can. But for almost everybody that's using the system, they have enough going on that they don't need the extra choice of 200 stocks.
And the thing is you really only want to follow one stock or make a trade with one stock at a time. It's very difficult if you've got you got a call going on in one stock and a put going on in another stock, and keeping it all straight and getting in and out when you should be.
Yeah, in fact, a lot of people like it with fewer stocks rather than more stocks. And that's what we're seeing on this window right here, is that's the reduced set of stocks.
That's pretty amazing. Two pretty amazing trades in one day.
Yeah.
And it's funny because we started this all because of all the movement in Apple, and you just showed us a far better move that had nothing to do with Apple.
Yeah, and the reason it came on the radar was not about news. It was about the chart. This chart here is telling me, whoa, I'm going to turn off the signal colors again. This is a daily chart. It's like la 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 la, bouncing around. This is kind of typical stuff. But then right here, the thing took off and went south. And we've got lots of ways to talk about that. One is support resistance that a lot of people talk about. But, it's right here. It says, well, it broke that, and that was yesterday. And then today, of course, it broke even further, which is what this window is telling us down here, is yesterday's, I'm going to put that back on, because once you get used to it, it says, see right there, it broke below the 20-day. And you see how the stock, and we talk about all that, see how it kicked up against it, it delayed
bounced around,
and then it ran down. Yeah. So if you want to trade, you can trade with the signal colors or with this K-band indicator. And again, you can change all the colors and tinting. And if you don't like these lines, you turn them off and put on the ones you like. And so you have a lot of flexibility, and it's pretty easy to change all that stuff.
Right. So joining us is Murray, who I understand was watching Apple the last couple of days very closely. Welcome, Murray.
Hi, Scott. How you doing?
Good. So, Alan, do you want to maybe bring back Apple? And Murray,
Sure.
do you want to tell us a little bit about what you were thinking when you saw what was going on with Apple?
Well, yesterday was the big announcement with Apple, and apparently they had a live feed that people were watching the event, and it was.
I watched it.
Oh, did you?
Yeah.
And so what happened? Did the feed conk out partway through?
Well, I noticed on my particular computer it would and I just thought it was my internet connection because I wasn't actually at home and I was someplace that had a slower internet. I just thought it was stopping and starting and stopping and starting. So I didn't realize that it wasn't necessarily my internet. So I can't. I guess everyone was going, well, this wasn't streaming as well as it should be.
Well, I just noticed these huge candles, and I'd forgotten about this event going on, and so when there's a huge candle, it usually reverses, so I was playing the reversals, and then I realized it was the event, and apparently it was, I guess people really liked what they were hearing until they couldn't hear it anymore, and they got upset, and the stock dropped because of the lack of feed.
Okay.
Of course, today, when people had enough time to gather their senses, that's where Apple took off. It was just a reaction to yesterday's loss and to the new products.
Right. So in other words, emotion rules.
Well, trader sentiment drives the market. That's where that's basically what we're dealing with. If people are losing money, they sell, and if people are making money, they don't sell until they've got enough profit, and then they sell. So you look at
Yeah.
this peak here at the top, Alan. You just had that chart up there. People saw a profit, and they took the red candle as just profit taking. So
Right.
that's just trader sentiment driving the market.
Cool.
But this program puts it at the top of the list, and you have a few signals that you check each time before you get into a trade. And if it's on the multi time frame charts, you can be pretty safe that you're going to make a little bit of money. And as Alan said, 10% is a nice amount of money to make in a few minutes to half an hour to 45 minutes to an hour. And that Apple trade was 2 hours.
Yeah. Yeah, that's pretty cool. And then of course, like you said, you had it going on during the event, and then you had it the next day when everyone sort of thought about it a bit more. You had another good opportunity.
Yeah, it was really wonky yesterday. Huge green candles and then huge red candles, and then it would just drop and drop and drop, and then it would come back, because usually when there's a large candle, it reverses. And so if you're a really good trader, you can buy and sell according to whichever candle was happening at the moment, as long as you can pick the bottoms, which is not easy to do. But there was a lot of activity yesterday, but it was probably better, a lot safer to wait until today and see which direction it was going in. And once you got the break, you just jumped in on the break.
Yeah, and just rode it, because it was a pretty nice move up today.
Yeah.
And so if you're not a good trader, you're beginning, we tell you what to go with, which is just the easy stuff. You want to get your success, and you want to repeat it and repeat it and repeat it and feel good about it. And then if you branch out, you're ready for it, because hey, I know what I'm doing. I got my bread and butter trade down. I'm going to go for some of this other stuff, because I've noticed there's money if I take that. Like you say, these little bit trickier trades. They're not tricky once you get to know how. When I was 1 year old, I couldn't hold a glass of milk and go drive a car at the same time. I just couldn't do that. But it's like you just get used to everything. How do you ride a bike? How do you do all that stuff? It's like, well, you just put a little bit of time in. And that's primarily what the replay is all about. Is like, well, can I just have the data so I look like I'm actually trading a real market? And can you make it so that I don't see what's going to happen? And it's like, yeah, that's what the replay is. And can we change all the indicators? And can we do this and do that? Yeah. And then play it again on a random day? Yeah. So that's the power of having all the software with the data all packaged up for you.
Yeah, and yeah, that's right. We need to be able to practice, and you can't practice just with the live market, because that's the slow way to do it. Because you can go back and you can look at, like, on your list right now, there's 2, 4, 6, there's 7 stocks. Well, you could go back and you could review all of those stocks. You could pretend that you're looking at trading or not trading them based on the information as it's coming in, the way it would come in live. And there's always a difference between live trading and practice trading. But the batter in baseball, the pro players, they get in their batting cages, and this thing throws a ball at him, and it's not a real person throwing the ball, but he doesn't ignore it. He's focusing on hitting that ball, because he knows that he's going to see a ball similar to that in the game. And right. and if he doesn't practice hitting it, then he's going to strike out. So and it's why they have practices. I mean, you have football teams that play once a week, and they practice 6 days. So it's really, really important that you get really comfortable, really practiced, because you're going to find out when you then can move over into real trading with real dollars, you have to deal with a whole bunch of other stuff you didn't have to deal with. And the last thing you want to be doing is thinking, well, is that a good trade or is that a bad? Should I get in? I got to get in because I got to spend my money. No, you need to have the good reasons. You need to be able to be comfortable with the pitches that are thrown your way, and that's the whole point of doing the practice. And the beauty of the Waves of Profit software is the fact that when you move from the practice to the live, you're not actually going from a machine that's throwing balls at you to a real person throwing balls at you and 50,000 people screaming at you. You're actually going into almost this you're going into the same environment, except now you're going to be putting your real money on the line. And so there's not a huge change in what you see when you go from the practice to the live environment.
Yeah, it's a pretty small step, yeah.
And that's really, really important when you're talking about your money. We want to make it as boring as possible. Trading should not be exciting. If you want excitement, go bungee jumping or
Yes.
parachuting or whitewater rafting over to Niagara Falls. But this is your money, this is your livelihood, and it should be really, really boring for 20 minutes.
And then that's really the mistake that most people make, and I really mean most. Like the biggest group of people is they jump into the market with money, and they don't have a lot of experience. And well, if they didn't have a choice, that's what they do. And anyways, it's just ridiculous to get out on a pro ball field and say, well, I'm gonna be out there and I'm gonna hit like the champs. But that's what day trading has been for most people up till now. Or the alternative is, if you use the baseball scenario, is, well, let's go watch a bunch of movies on baseball, and then we're going to go out in the field and play with the real players.
Yeah, good luck with that.
Yeah. Where's the middle ground? And that's what the replay is like you get tons of time in the middle ground, way more, as much as you want. So, anyways.
Yep. Cool.
Well, that's it for me today, Scott. I don't know if there's any...
Yeah, well, thank you very much, Alan. Really appreciate having you. And Murray, as usual, thank you for your contribution. Really appreciate you as well.
I have 2 more cents to add.
All right, add your 2 cents.
What we're looking for, when everyone first got into a vehicle and tried to drive, they don't remember all the things that they had to do. But now everyone gets into the vehicle and automatically sets up the mirrors and sets up the seat properly, puts the seat belt on, puts the key in the ignition, and by the time they're driving down the road, there's about 10 or 12 different steps that they follow, and there's a plan and a process that they're following. While trading, you have to have a very, very conscious plan. Step by step, you have to know what you're looking for before you get into a trade and what you're looking for in order to get out of a trade. And you have to have your targets in place, and you have to have everything set in an order. And if you don't have a trading plan, you're going to get eaten alive. And if you have a trading plan, and that's what the replay allows us to do, is work out our trading plan. We find the trades that work for us, and we figure out the process, the step-by-step on how we found it, and we go into the live market and try and find the exact same setups that we're comfortable with, and we apply our process and our trading plan, and we get into the trade and make some money.
Awesome. Thank you. That's a perfect way to end today's show. So thank you, Alan. Thank you, Murray. I'm Scott Patton, www.wavesofprofit.com if you want to know a little bit more about the software and the training that we give. And we'll see you next time, everybody. Thanks for joining us. Bye-bye.
Good night, Scott. Good night, Alan.